Hey guys, this is Jake Eldridge with Realty One Group, Eminence, and the Davis Catalano Real Estate Group. Just wanted to share some information that I just received via email from one of my lending partners. He brought up a bunch of good points, so I'm just going to kind of run through those. Right now, he said mortgage investors are pretty spooked out by cities and businesses shutting down and the thought of possibly a 20% unemployment rate, that they completely abandoned the mortgage market. So mortgage rates did go up quite a bit from an all-time low into the mid fours, 4%. Still a good low interest rate, but it has risen from what it was sitting at. The Fed said that they will still be buying mortgages like they did in 2008. And with that statement, rates did go back down into the low to mid threes all in one incredible day. So, next, he pointed out that Fannie and Freddie are allowing borrowers to reduce or defer up to 12 mortgage payments with no credit hit. They obviously don't want a foreclosure or short sale crisis like what happened in 2008. You can call your mortgage lender for more details on that. Again, Fannie and Freddie also acknowledge that appraisers might be a little freaked out going into a stranger's house. So they made it so they don't necessarily have to physically inspect the property right now. They're allowing for desktop and drive-by appraisals on some transactions, mostly seeing that in owner-occupied purchases, but some are being seen in second homes and investment homes as well. IRS extended the tax deadline to July 15th, but they also shut down their offices, so it makes getting transcripts a little challenging for lenders. So they're looking for alternatives to use. Again, Fannie and Freddie told lenders to start being a little more cautious when it comes to confirming employment. They want them to do it on or very near the day of funding. Told them not to trust any dated documents and to make sure 100% that the borrower has the ability to repay the loan for the next few years, and to make sure at closing they're doing that. So not to fund loans where there's any doubt they're not going to be approving the loans. So keep that in mind. Obviously, I'm sure you've seen the news with Congress is giving $2 trillion in relief to help us get through the coming weeks and months. He said the jumbo loan market completely melted down. Those loans are going to be very hard to get going forward. They're going to take a lot longer to close. They are not backed by the government, so if you have questions regarding jumbo loans, make sure to reach out to your lender. The non-QM market, bank statement loans and alternative document loans, also completely melted down. The loans have nearly all disappeared going forward, as those are also not backed by the government. So you're going to see a decrease in those. Almost all lenders that were offering down payment assistance programs have suspended those products for the time being. A lot of lenders had to make, a lot of difficult decline calls to borrowers this week. Some of them were even at the closing table ready to sign. But again, a lot of that has to do with the ability to repay a loan and the layoffs that are occurring due to the shutdown. So that's pretty awful. But as we work through this, hopefully these things will flip back on again once we're through the coronavirus madness. FHA and VA loans, they're still out there. They're obviously struggling a little bit for survival, but with all these changes going on, some lenders have shut them down. Some of them just raise the credit score criteria and interest rates to limit their risk. The good news is the lender that sent me this is Seamus Murphy with Guild Mortgage, and Guild is still doing both FHA and VA loans. They did raise the credit score requirement from 580 to 600, but a lot of the others out there, I guess, were going up to 640 as the minimum credit score. He noted that Quicken, which is the nation's largest lender, is rumored to have alerted the government that they may need help to survive. So, his note on it was it pays to be a 60-year-old company like Guild. They are the oldest government lender in the nation, and a company that sells directly to Fannie, Freddie, and Ginnie, and they survived through 2008. So hopefully you found some value in this. I just wanted to share it as more details come in regarding the situation. I will be posting more and more videos. So if you do have any questions or concerns, you can contact me directly at 775-378-4976. More than happy to also share Seamus's contact information if you have questions as well. You can also email me directly at jakeeldridge32@gmail.com. So thanks for listening. I hope you found some value in this video. Again, just wanted to share from another perspective what's going on.